All right, so I'm going to attempt to explain short selling a stock one last time. I'll try and keep it simpler this time and put a little less stuff. But anyway, if you look at that first sentence, short selling, a process by which an investor sells a stock that they do not own. So in this case, again, I had the Tesla stuff. Let's say I can't remember the prices exactly, but I think I sold it for 80 bucks, but I didn't actually own it, right? And when it works out, I can actually buy it later, and that's the selling short, selling something I do not own, with the anticipation that the price is going to drop. And so when it comes to time, since it was an option, I have the option to make good on those shares by purchasing those shares at that reduced price, since I didn't actually buy them. Does that make any clearer? Anyway, it's a very negative type thing, but it's what makes a market. Those sort of vulture people are, you may think, oh, they're predatory, but they're what keep the market from, when it's starting to descend, they're what provide a floor to it. One of the best things, again, getting back to that selling short, the Big Short movie, was these two guys who just had kind of a minor role, but they'd made quite a bit of money, and their strategy investing was to look for the loser companies rather than the winner companies. Everybody's always trying to identify the next big thing, and these guys were trying to identify the thing that's overpriced, that's doomed to fail. And their part in the movie was they identified that these mortgages were probably going to go down, and so they came out of it making a lot of money. But their original business model of just looking for companies that are teetering, sometimes it's easier to guess the future losers than the emerging winners, because there's nobody's gets quite as excited about them. You don't have nearly as much competition. So short selling, we did that. Come on, move. So when you're analyzing stocks, you can be a technical person, which means they're kind of chartist kind of people. They get in there and they look, and then they look for patterns and candlesticks. It's I'm not saying they aren't successful, but it's not that intuitive. It's more mechanical. You don't need a lot of input from the real world. You can sit in a closet. Yeah. It doesn't make sense. It doesn't perform rationally. Yeah. Fundamental analysis, that's looking at, what's the strength of the company. So, something like, again, like a Buffett approach would be more fundamental rather than technical. Analyzing the firm's financial conditions, going through a balance sheet, income things, there might be certain things stick out. But again, another service, the one I use is nothing special. It's called Motley Fool, and it's I think maybe $200 a year, and they've got different things they evaluate on different groups. But I've got Rule Breakers and Stock Advisor. But anyway, these guys they provide advice on different companies. That's a lot of the companies that I've gotten in my portfolio. And it's worked for me, but each to his own. There's competition out there. It's a free market. Firm's performance. So yeah, it should have a huge factor on it. But again, stocks are, you don't want to be looking in the rear view mirror. I mean, you want to maybe look for proven performance, but you're really buying it upon their outlook. What's going to happen for them next. Using that, I probably, like I was mentioning, NVIDIA, I should have sold that, because they were definitely affected positively from the Bitcoin. The big spurge on that. Now Bitcoin's stuck in the 3,000 to 4,000 range. There's not a lot of hype around it, and it doesn't make sense to mine it, and the rest of it gets more complex. So I probably should have got out of that, looking at what the future of that stock holds for it. Anyway, it all comes down to supply and demand. How much, it's The stock price will sell competitively, and it's definitely free markets. Accounting fraud. You know, the Enron guys, they kind of got hustled even. I don't know if they were as bad. It was sort of the same team of federal prosecutors that don't have the best track record. But anyway, there's some guys like Bernie Madoff that were absolute crooks, had pyramid schemes and things like that. So again, if you think you're getting, I'm getting a 20% return and there's absolutely no risk, that's not logical. That does not pass, the test. There's no reason why you were getting that return. There's got to be something odd there. And a lot of those people just didn't care to dig, and they lost their life savings. Economic conditions, we can't necessarily change those. GDP, gross domestic product, so you hear this quoted all the time, total market value of all the products and services. It's been cut now, but it was up, estimated to be around 4% under the previous administration. It never exceeded around about 2%. So fiscal policy. The Fed tries to control things. The Fed is a pseudo-governmental agency that tries to set interest rates to control the money supply, but whether they do such a good job at it is a matter of opinion. And then other impact of international economies, it's really, like they say, when the U.S. sneezes, the world gets a cold. If you were in even China, if the U.S. market takes a downturn, the Chinese market's going to take a downturn. But the U.S. market is still a dominant role in the world, tends to affect other countries more than it's affected by the other ones. So it is all interconnected, though. So interest rates perform better when rates are low, because companies can borrow money for cheap, and so the market will tend to go up when we have low interest rates. Obviously, some that are more capital intensive need more money. They're going to be more sensitive to it. So, and again, Federal Reserve uses monetary policy to influence interest rates. Yeah, influence is probably a better word than control, because they don't have absolute control. And that's monetary policy is how they set that. And what they do is they control the prime rate. That's the rate that banks loan from one to another, where there's essentially no risk of default. And when you set the prime, then that kind of sets the interest rates for the rest of the economy. But it doesn't always work perfectly. Inflation. So different ways of doing this. Consumer price index. They talk about a market basket of goods, just some regular things that average consumers buy, and they try to judge what the inflation rate is. But again, if you're somebody who's commuting from the valley every day, you are going to, inflation in gasoline is going to be huge for you. Whereas if you're somebody who lives and doesn't, rides a bike, you're going to be unaffected. But you may be more affected by groceries, So it's just an index. It's not exact for everybody. And the producer price index, same sort of thing, but that's more on the, the producer side, the wholesale side. Industry conditions, analysis. But again, it's mutual funds, and that's why I know we're getting kind of in the weeds here in stocks and stuff. Because this is actually the stock section, but mutual funds, what you're trying to do is have a little bit of knowledge. You may not be the doctor here, but you can tell when, certain things are healthy or unhealthy. I mean, you're if you're not in the business full time and not very talented at it, you may want to get advice when you're doing it, but you can have much more informed discussions, and you can use the advice that's out there and available if you know the basic concepts, the basic terms, and how things work. So it's not to make you some master investor, but it's kind of to recognize, hey, this person's a fraud, or hey, this sounds logical, so that you can make informed decisions. Analyzing stocks. So again, there's a lot of things to go into this, but if you're comparing stocks, they're all in the same economic growth model. They're all affected by the same interest rates. So, the option is to put your money in a mattress, but that's probably not a good idea either. So you're looking for, somebody like Moody's, Standard & Poor's, or Morningstar on the mutual fund side to make these comparisons amongst them and then see if they make sense to you. And we'll talk more about it as we go. Analyzing stocks limitations. Yeah, future conditions and favorable attributes are, reflected in stock prices. It's very, very frustrating if you're somebody who's oh man, the unemployment numbers are, super low. That's going to be great for the economy. And then you see the stock price go down on a particular company. It's like, why'd that happen? It's like, well, that's already been factored in. That's old news. That's what they expected, or you'll see that on earnings. Oh, they made $1 a share and the stock price dropped. Why that? Well, because they expected to make $1.25. So unless you know this stuff, you can get very frustrated trying to watch it. And also getting back to the labor thing, low unemployment's good, but it does mean a tighter labor supply means that labor costs are going to go up. You're going to have to pay people more. That's why a lot of people want, a smaller market because of automation and immigration. You have kind of an oversupply of labor, so you have to do artificial things like setting minimum wage, which in a free system would not be necessary because you wouldn't have that artificial excess of labor. But anyway, I think we're going to leave it right there. I want to talk about two things. First, I mentioned, and I apologize for using a freaking Edge here, but Google Chrome is not working for me today. Yahoo, I always, rag on Yahoo being kind of out of date. I wouldn't get advice from them. But one thing about Yahoo Finance, and Google Finance is probably the same, but they do have pretty good charting and things like that. So just from the discussion, this is just their top page, but this is the S&P 500, so Standard & Poor's 500. So again, it's just going to be a selection of stocks. If you're tracking things that are reflected in there, you'd see the green, you'd see it's a positive number. The Dow 30, a smaller group, as opposed to the Dow Jones Industrial, and then the NASDAQ, where pretty tech-heavy type stocks. And then let's say you want to look at a company. Let's say there's a company called Shopify. I don't know if you guys have heard of it. They're kind of in there with Amazon, so it's not as big as Amazon, but they're tend to now again, since I'm not paying anything for what do you call it, I'm going to be getting clobbered here with all these free ads. I did not want to get to this site. Let's try this again. SHOP. Okay, here's the graph I'm looking for. And this is why I'm saying that tabular data from before is kind of a joke when you see what's available. Now this is just, you look up here first off. This is the range. 1 day, 5 days, 1 month, 6 months, year to date, 1 year, 5 years, and the max going out to the extent of the company. The other thing about this is sometimes you'll see the numbers kind of get fudged, at least from a display perspective, based upon whether they have a logarithmic scale or what they have going here. But this is a company that I'm invested in. I'm pretty happy with it because I don't know that I get in it right now because it's going up quite a bit. But see how when I move the cursor across here, the price, it tells me each day what the highs and lows are. I mean, this is way better. If you're thinking about, I might be buying this company, what's the trend like? Rather than digging through, newspapers for tabular data, that's ridiculous. And here so back on December 21st of 2018, it was trading for $122 a share. And now, it's teetering up around, been as high as 205, 206, and now it's back down to 201. So it's a lot more powerful. These little bars across the bottom, that tells me volume. So if I see huge price fluctuations, let's say back here, see this low dip here? This is pretty indicative of a meaningless low because it happened over the Christmas holiday. If you notice, that's Christmas 21st. Yeah, it hits low on Christmas Eve. and the volume was like nothing. This little white bar is not a big deal. I mean, you could have, if you would have been there on that day, you could have got it for that price, but it's not indicative that the market's fallen away for the stock. It's just indicative that there's just everybody's on vacation, you know. And then some of these other things, you see this huge day of trading, 12 February. If I was buying this company, I'd go back, I'd search a news report and say, what happened to Shopify on the 12th? You know, there must have been some sort of news to drive that sort of. So there's a whole bunch of information built in here that's good. And then down below, you know, more specific stuff. So, you know, close, open. So that's where it's closed last night, opened today, and the bid and the ask. So just prices. Again, you type in the numbers and it'll show you the range of the day, 52-week range. So over the year, it's not quite doubled. That's kind of 100% gain. Kind of sort of if you would have bought in on at the right time. The volume, which is may or may not be interesting. The volume data is best utilized on the graph because then it's comparative. Just looking at raw numbers, you know, 1 million something sounds like a lot, but if it's 2 million is the norm, it's not a lot. So the market capitalization, the beta. So this is a bit more volatile, almost twice. So remember Standard & Poor's being 1. This one's 1.86. So it's, you know, it's not for the faint of heart. Price earning ratio, they're probably not posting earnings. They're one of those stocks that earnings per share, earnings date. I'd probably be looking at, you know, when their next earnings come out, you might see a big fluctuation there. Dividends, these guys are a growth company. NA, not applicable. We ain't doing it. We don't pay earnings. Dividend date, And estimated target. Now this is somebody's advice. I want to know who put in that advice before I decide what it is. But if the 1-year estimated target was 187, it's trading for 202 or 205 or whatever it is. I'm like, dude, your information's old. So anyway, but you can do this for any company. And you can, you know, with the power of Google or whatever, you can figure out a ticker symbol. Not hard. Like NVIDIA. See how NVIDIA is not having a good day? Everything's red. Their prices were up a while ago, and now it's just, you know, their 5-year. You can kind of, you can almost map this to Bitcoin. You know, Bitcoin was going up, and then we kind of lost popularity with it, and now they're just going back to being a good graphics company. Fair enough, but smart money I should have sold back in here. But, you know, greed's a horrible thing. That's what happens to people. So, yeah, well, that's the thing. And so you don't want to get beyond your comfort level. But I'm just saying this information's out here. But you could go, you could do the same thing for mutual funds. One last thing, because you might even use this in your Fidelity Investments. You can get the same information through your brokerage firm. Without all the ads, so it might be better. A little less annoying. But the reason why I use Yahoo is because Yahoo's the one that feeds. If you look at stock quotes on your iPhone, they're the one that have that app. So, but here's Fidelity. This is one of the brokerage companies. But you can see in here, you know, retirement, IRA, all this other stuff. You don't necessarily have to open up an account, but you can go through here and use any one of these sites and use some of their information for pulling charts for your paper. You know, when you're how much money am I going to need? What rate of return am I going to get? Other investment calculations. You can pull a quick screenshot from a lot of these products and get it. So retirement right here. And they'll have a whole section where you could drop through and kind of come up with a strategy. So, which brings us back to the project. So you ought to have, a pretty good idea of the things that you need to start working on for the project. Again, it really needs to be 4 or 5 pages, so don't, if you do it in 2 pages, it's probably not complete. And the other thing about this is this ought to be a product that you can hopefully use, later in life. You have a bit of a plan. Again, no plan, your situation, you're only kind of forecasting what's going to happen. So, but as compared to having no plan at all, it's far easier to identify, and modify a plan. For typically most companies, you walk in there the first day, you go to the HR, kind of whatever they have in terms of an onboarding process, and they're going to present you, what do you want in terms of these decisions? What do you want in terms of healthcare? What do you want in terms of your, investment allocations? And if you're trying to start the new job and think about this at the same time, you're probably going to be a bit behind the power curve. So if you have a template or a plan of how you want to do it, which you can form through this paper, I think you can knock that out. So again, starting to cough here, but you can look at this thing for whatever time frame in your life, that this thing is going to be relevant. If you're a traditional college student, you're still going to be in college for a couple, 3, 5 years, then it doesn't make a lot of sense to do the planning on what money you have available right now. If you're somebody who's already getting more established in life, you already have funds available, then look at it, for where you're at right now. Questions on that part? Has anybody started on it? Thinking about it.
Writing? Yeah, I kind of have a small outline, but it's not.
Has anybody used any resources online, anything to kind of, literally there's, you got Vanguard, you got Fidelity, you got T. Rowe Price, you got TI Craft, you got all these different companies out there, and they all want your business, and you're the demographic that they're after. So they're trying to get you to, again, you don't have to establish an account with these people, but they're marketing and their planning tools that are out there free and available are pretty good. Now, you don't want your paper to be just one screenshot to another, but if you're, if some graphic kind of illustrates your point, go ahead and use it. And again, the personal factors, I'm not looking for, obviously don't use your own name or whatever, and you don't know what this exact situation is going to be, so, but try and make it somewhere close to what you're kind of planning for your life, so that it's, in terms of marriage, kids, things like that, where you're going to be located, to make it more useful. Student loans, how you're going to get that sort of taken care of. Hopefully you didn't have a bunch of those, but if you do, you got to get that basically settled so that you can get on with saving for the rest of your life and your retirement. Social Security, look at that site. They're pretty straightforward. They tell you, what you will be entitled to, but keep in mind that thing is pretty underfunded, and so it's not going to be lavish benefits, and it's only going to get worse. And if you are somebody who actually has done a good job and saved for yourself, you may get screwed anyway, because it'll probably be means tested, which means they look at how much money you have available. If you're a multimillionaire or have that kind of savings, they're going to say, you don't qualify any longer, even though you put money in it. There's maybe no fairness to that part of it. Stocks, bonds, mutual funds, what you're going to do there. Also, just sort of simple things. If you say, I'm going to save for my kids' retirement, but you just say, I'm going to put it in, a mutual fund or something like that, that's probably not going to get you the best grade. If you're saving for specific things and you know a little bit about the tax code, it would make more sense to put in a specific type of plan that's tailored for that. So there's certain plans that are tailored for medical savings accounts, But on the education side, there's these things called 529s or uniform gift to minors, things like that, where you put money into a mutual fund, and when the money, goes up in value, those capital gains, they're tax free if the proceeds are used for education. So it makes a huge difference. If you save your child, 100,000 to go to school, but you do it not very smartly, they only get like 70 grand because the rest got ate up on taxes. If you save that same amount of money, but you did it under 529, the whole 100,000 would have been available. And so you got to kind of look at the thing too. The reason why they're have these weird names and numbers is because they're in the IRS code. So you look again just at an explanation of what the limitations are. Let's say your kid, decides he wants to be like the guy on the beach I rousted last night. I'm like, dude, you gotta leave. You can't camp here. But I can't move. I'm like, okay, I'm giving you till tomorrow. Okay, it's every day. This is welcome to my life. This is how it's gonna be. Moving people along. You can't be here any longer. But anyway, that guy's college fund. Those parents. That was not a good investment. And so if Johnny does decide to go that route, what's your recourse? You just don't want to buy more of whatever is causing us problems. You want to be able to maybe pull that money back. Anyway, career fields. You can also use a thing called a glass ceiling or some other things to see how much money a prospective field. Don't blindly, get yourself all the way to a college degree and then find out, oh no, this isn't what I want to do. Or this doesn't pay what I thought. I mean, this happens. Seriously, I know veterinarians I know more unhappy veterinarians that thought, oh man, I'm going to get paid just like a doctor, and I'm going to get the same respect, and it didn't work out for them.
Depends on which animals you treat. If you're here and you treat goats and cows, you are in hot demand.
Large animal vet, man.
Large animal vet, here, big money. Midwest,
yeah.
Please die.
Exactly. But that's what you get. But the best advice, and this goes kind of beyond. I mean, it's related to personal finance, but internships. That's what you need to do, because that's the way to do it. Takes all the stress out. You walk in. If you go to a job interview anymore, it's all legaled up. They can't tell you much about the company. They can't ask you much. Everybody's afraid you're going to sue each other, and it's just. If you come in there as an intern, you're low threat. You get to see the people. Their guards are down. And then when you get to the end of your college, you don't have to worry, am I going to get a job? If you did a good job as an intern, they're going to hire you on. So that's the best thing you can do. Whatever, military career, if you're doing that, there's different retirement plans for that. Tax-deferred compensation. So, the 401ks, IRAs, Roth IRAs, we'll talk more about that, but all those things, again, if you're going to save money, for retirement or for something else, and you're not using one of the tax advantage plans, you're hurting yourself. And some of the people who are out there in the field, golly, they don't know much about it. I mean, I've literally had CPAs in this class, and it's like, you did what? And you did this? I mean, it's just, there are ways with, less work. I mean, I'm no financial genius, but I've got this one plan that they mandate that 50% of the money needs to stay in a conventional mutual fund, and the other 50% can be self-directed. So I'm adding 10% of my salary to the mutual fund side, which that cash infusion of 10% every year, you would think that side would. No, the other side, the stock side, outpaced it. So I could never put in any more money in the stock side because the stock side, my own investing, is way above what the other one is. And that's without 10% of the income going in there. It's just feeding off the stocks. So again, I mean, my mom wasn't a financial genius, but she always said, your money needs to work harder than you do. And that's it. The people with real wealth in the world, they didn't work for it. Their money worked for them. They got the initial seed money, but then it took off. And so that's where you need to be. But anyway, so tax deferred compensation, good way to go. And all these things are interrelated too. Another one, and I'm not, believe me, we could talk about my failures, but that wouldn't be as pleasant. But there's some stocks I've bought that are not good. But another one I did, it went up 521% in a year. It was like, and it's like, again, forward looking, that lightning is not going to strike twice. So I got that money and I bought some other property, because property, again, stable. It was under an IRA, so I couldn't cash it out. If I cash it out, I got to pay the profit on it, so I got to keep it in the market. So I found a firm. There's a limited number of them, but it's legal under the IRS, that can hold property under an IRA. It's amazing. So it's up by Chickaloon. It's by Long Lake. You guys know where that is. It's a big chunk of land. It's fairly remote. When you're driving up to Long Lake, you get to mile 84.5, and you look off the side and you go, holy crap! It's because it's like a big cliff. But it goes all the way to the Matanuska, and it's a retirement thing. I can't derive any benefit from it because it's under an IRA, but I can hunt on it. I can have my friends hunt on it. I can do whatever I want. So there's lots of things you can do, but you got to get that initial seed money kind of going. What else? Yeah, I mean, what I would do if I was curious about this kind of stuff, I would kind of look at this. It's not supposed to be a bulleted checklist, and your paper needs to sort of flow a little bit. But look at some of these topics, and then go to one of these commercial websites, and one of them may appeal to you, and has kind of user-friendly calculators and retirement guides and advice on financial matters, and you'll be able to come up with a plan. Questions? Yes.
Can I ask, your Coverdell education account is similar to some kind of
Yeah, the Coverdell.
or
Yeah. I've never had a Coverdell myself, but I see the name all the time. It's Coverdell or Coverdale.
for my family, my husband put the money annually around 2,000. This year, my youngest son gonna use for the college larger fee. But I think it's not that much.
Well, it may not cover the whole thing, but I mean, you're maximizing what you can do with it. When I type in Coverdell, maybe I got that wrong, but it came right up to the front. Yeah, Coverdell is the right thing. So is account tax advantage using the United States. So again, it's the same sort of thing. Mine, what I was talking about was a 529. This one's section 530, so I guess it's one better, whatever. Just a different label in the code. But I'll look at the details. It's fairly current. It came out in 1997. But any of these things have this same sort of thing. And here's even one with a PFD planner as well. So some of these state-run plans, that are run by whatever university, a lot of times they have some convertibility where you say, you establish your educational savings plan with Florida State or whatever. But if your child says, screw Florida, I don't like the Gators or the whatever the other, what's the other one? Come on. No. Yeah, that's Port St. Lucie. The
Yeah, okay.
Tallahassee. What's that?
The Tallahassee Council.
Yeah. Those people. Okay, so anyway, you decide, your kid, he's out there on my beach. Florida's not going to be a good environment for him. You do have the ability to use that money in a different thing. But anyway, they're all achieving the same sort of goal. They're letting you save money for your children's education, and if it's used for educational purposes, then you're good. And again, there's going to be these are just different rates. So it's hard to you guys have got as much skill. I'm not on Chrome today, so I don't have as good of essay on this stuff as I typically would. But you can go through and you can look at a tax advantage financial savings plan. You can look at a retirement advantage financial savings plan. So we'll go through the different aspects between a Roth and a traditional IRA and a 401k, but they all kind of get to the same place. Some sort of favorable tax treatment if you're saving for retirement, if you're saving for education, if you're saving for medical needs. So they're all pretty good, pretty useful. But they all have limitations, you know. Like I say, I cannot touch that money until I'm 59 and a half. Or if I do, I'm paying a 10% penalty, plus all that money is added to my current year's income. And anyway, you end up getting beat up badly.
Also, we couldn't invest just like individual investing. We couldn't.
No, a lot of times you're bound by the plan. But again, I've got another one with a different company. Unfortunately, I didn't make the best stock picks with that one. But I sold all the good stuff. I mean, again, we had some good picks, but anyway, it's still, yeah. Depends on the plan. Some of them are just straight mutual funds. Some you can pick individual stocks. So, all righty. We'll talk more about it next week.